Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, 4137 on the S&P 500. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast team, Carol Massar and Tim Stenovec, joining us right now, bringing together our Bloomberg Television, Radio, and YouTube audiences worldwide. And Carol, we had a pretty good day here earlier today, and then we got those headlines about that potential tax proposal, and that erased a lot of what we had.
Well, whiplash, talk about it. You know, if you blinked, all of a sudden the markets went from gains to losses. We're pretty much hovering around our lows of this of the day, but we're seeing all of the major industry groups in the S&P 500 under pressure. The big question is about capital gains tax, guys. Tim, is that, you know, whether or not we ultimately see something happen, but investors have to be kind of a calculus right now about what to do.
Yeah, look, on Bloomberg Radio, we just spoke to Aaron Kennan, who said this is basically like an opening salvo here, right? And although the report indicates that the Biden administration is looking for this, perhaps this is just an opening offer as something that could end up going lower, but certainly the market's not reacting positively to this news.
And we echoed similar comments from Chris Ailman of CalSTRS, who we just had on this program, Caroline, as you're well aware, and really highlighting how that punishes the long-term investments of which he is so into the market. And how do you close the deficit of what he said he's been worried about for 15 years, but not punish those long-term investors as well?
Long-term money. We've got to remember this is a tax aimed at the wealthy. And we know that big spending is being promised when it comes from an infrastructure bill. At some point, well, they always said it was going to be funded. I'm interested by the whiplash, considering this was a campaign promise, Romaine.
Yeah, and those headlines crossed a little bit after 1 p.m. New York time here. We had about 50 points erased off the S&P 500. It did try to recoup some of those losses, but it's going to end the day down about 0.9%, 4134. The NASDAQ composite, 13,817, also down about 0.9%, 1%, call it. Dow Jones Industrial Average also down 1%, back below 34,000. And we should point out the Russell 2000 had been the outperformer here on the day. I guess technically it still is. It was up as much as 1.3% here before those headlines moved. It's going to finish the day down right now, down about 0.3%.
You know, Romaine, I love that you mentioned the small caps. There was some great stuff on the Bloomberg today. I'm going to read my notes here. Russell 2000 members trading above their 50-day moving average, falling below 40% compared to about 80% for the large caps. We're looking at that gap. And previous instances when we've seen that, we've also seen some more pressure on stocks. All right, Intel crossing the Bloomberg terminal. Let's get to it. First quarter revenue, $19.67 billion. That is down about 0.8% year over year. The company, though, and this is going to be key in terms of the trade, Caroline, they are raising their 2021 fiscal, or I should say 2021 year guidance.
Yeah, why? Because they supply chips. Why? Because everyone's desperate for them, of course. We know the supply side issues that have surrounded overall the chip supply chain. Of course, this is why Intel is doubling down, wanting to bring back manufacturing, the fabs as they're known. But we're off by 0.25%. Interesting remarks as they say their full year adjusted earnings per share, $4.60. So they'd seen previously $4.55.
But
the estimate was for $4.56.
Caroline, do you see this data center revenue, though? I mean, you're talking about a $5.6 billion number coming in. That's below what the street expected. I mean, all the time we're here talking about the competition that they have with AMD and NVIDIA and all these other companies out there. This is all about data center. They've been losing ground here, and then you come in and miss on that number. No wonder the shares are down.
Yeah, Intel stock up 25% this year, but right now after hours down a little more than 1% as investors try to make sense of these numbers. The shares so far this year have outpaced the advance in the Philadelphia Stock Exchange Semiconductor Index, which is advanced by 12%. I'm looking for commentary, guys, about how the company is thinking about government help when it comes to actually improving the supply chain here in the United States.
The only commentary I see so far, I'm only on page 1 of the press release, Caroline, but the commentary that I get from, of course, the new CEO, Pat Gelsinger, saying this, of course, a pivotal year. We are looking at momentum. We are trying to rapidly progress our plans with a reinvigorated focus. We want to accelerate our trajectory, capitalize on the growth in semiconductors to power, of course, this increasing digital world. So really trying to come out with some strong words to reassure that they are on that plan and they are tackling Intel 2.0.
Intel predicting second quarter revenue of $17.8 billion, a profit of $1.05 a share. Analysts were projecting $1.11 a share on revenues of $17.6 billion.
I mean, they're not really raising much in terms of their full year adjusted revenue, are they? $72.5 billion they'd seen 72 billion.
Well,
so
and the other thing,
they just managed to raise it by $500 million. I'm not scoffing at 500 million, guys, but interesting that the street had basically seen about 72, so maybe a bit of a letdown there as well, Romaine.
Yeah, absolutely. And I mean, look, I mean, we talk about this earnings season. I mean, the numbers, the backward-looking numbers, certainly important here. But people really want to see those forecasts nudge a little bit up, particularly for companies that are in very competitive industries like this. And we know all the issues Intel has had. Obviously, they had a relatively new CEO here who still needs a little bit more time. But at least right now, in the short term, Carol, still some pressure.
Well, Romaine, I think you get right to it. I mean, this is 1 month after Pat Gelsinger announced that he's going to spend billions on manufacturing. They're going to build a bunch of new factories. At that point, they gave information on the first quarter. What's important here is the second quarter, and the company did say it sees second quarter revenue of $18.9 billion. Company sees second quarter adjusted EPS of $1.05 a share versus an estimate of $1.11. So, you know, a lot of the street was looking for a little bit more of an outlook from this company, especially into the second quarter and beyond.
Carol, that might be the understatement of the day. Pretty much all the analyst commentary I got said that this is going to be an underwhelming first quarter because all they cared about was that forward guidance, right? Yeah. Susquehanna, Tim, is one commentary that I'm reading here as we were heading into the print, saying management had set expectations for an underwhelming fiscal 2021. How do we grow from here? How are we hearing comments around CPU inventory?
Yeah, you heard Romaine talk about the data center group revenue coming in at $5.56 billion. That's down 21% year over year. Also, the estimate came in at $5.89 billion. Gross margin, 55.2%. That missed analyst expectations of 57.98%.
And the other thing, too, I mean, we're all waiting for some other earnings here, too. We should point out Snap and Mattel going to report later tonight. But even prior to this earnings report coming out, we had seen a lot of weakness in a lot of those chip stocks. A lot of this seemed to be tied to concerns about inventory build. Remember, this chip shortage has sort of been working to their advantage, but there's this concern here about a lot of pull forward here, Caroline, in some of that, and that, well, okay, you get a little bit of a boost here in Q1, maybe into Q2, but once you get to the second half and into 2022, maybe that all goes away.
Gross margin, 55%, missing the analyst estimates of 57%. Margin is really going to be the watchword for the whole of the earnings season, really, I think, Carol, because this is going to be the tell. This is going to be if you've got cost increases on the rise. Shouldn't perhaps be affecting the likes of chips so much as we've been seeing with Chipotle, for example, the CEO we spoke to a little bit earlier, and some of the commodities that underlie there. But interesting that we're seeing a margin hit overall. Mattel, it looks like it's coming out, Romaine. Mattel, first quarter adjusted gross margin, 47%. Actually, well ahead of expectations there of 44%.
Yeah, I think we should turn just real quickly here and look at Skyworks here. They actually just coming out with a statement here saying that they're going to buy the infrastructure and automotive business of Silicon Labs. Silicon Labs shares are halted right now at the moment. This is about a $3 billion deal, so not a massive deal here, but an interesting strategic one specifically for Skyworks. But this, of course, been trying to diversify a little bit away from Apple and that supply chain with the iPhone.
Yeah, Mattel, you guys mentioned that. I'm going to go back to that. That stock, we're seeing it up about 3.5% here in the after hours. I mean, this has been one of the pandemic winners as people were stuck at home. They bought a lot of toys for their kids. It's up again 20% this year. We're going to be talking with the Mattel CEO tomorrow. So, you know, kind of getting an idea. And the supply chain is one of those things I want to find out about, right, in terms of how they're managing it.
I just got to say, this is one of my favorite pandemic stories, guys, right? The narrative that emerged. Yeah, the narrative that emerged over the last year was, right, especially at the beginning of the pandemic. Everybody was stuck at home. Grandparents wanted to spoil their kids. Parents wanted to spoil their kids. They were sending them Barbies. They were sending them Hot Wheels. They were sending them Fisher Price.
They wanted to spoil, but they wanted to keep them busy.
And don't forget about all the games. All the games. You know how many games we bought during the pandemic?
A ton. A ton.
Yeah, it is a distraction, my friends. I love it that Tim thinks it's treating your kids, but I think there's also to do with it. Like
I only have one, so that's where that's coming from.
You know, all I have to say is we take a look at those red heads again about Skyworks buying Silicon Labs. One thing that really sticks out to me, $2.75 billion. It is all cash. It is accretive immediately. If it is cash, Romaine, you do not want to share the upside with the target because you, as the buyer, want all of the upside for yourself. It signals confidence in the deal. You're not giving away that stock for nothing.
Absolutely, yeah. And this is actually a big deal. I'm sure we'll get a chance to dive into it a little bit later, but just from a strategic standpoint, this is actually a big deal for Skyworks. It really goes well beyond that $2.75 billion price tag.
Guys, keep an eye on Snap. The company expected to release earnings later today. It's had an incredible run over just the last year, a far cry from what it was just a few years ago. Big question that I have about Snap is how are people going to use it post-pandemic? Again, when things are going back to normal, are people going to be using their phones as much, communicating over their phones as much, and using Snap to do that?
All right, we're going to wrap it up, folks. Right now, Intel down about 1.25% here in the after hours. That's going to do it for our cross-platform coverage on Bloomberg TV and, of course, on YouTube. Join us again, same place, same time tomorrow.